Bitcoin has liquidated over $1 billion in positions during its most recent move down, as it briefly dipped to the lowest level since March. A record $237 million were pulled out of Bitcoin ETFs during that move. Bitcoin's price fell by 30%, the largest decline since June of 2022. But Bitcoin's history shows us that 70 to 80% declines are also not uncommon, something that could potentially take its price back down to the same level it was at in late 2022. But in the midst of all this panic, a major bank came out explaining why they believe that this market correction was very close to becoming a buy the dip opportunity before Bitcoin resumes its bull market. This was none other than JP Morgan. Their head of positioning said, "We think we're getting closer to a tactical opportunity to buy the dip." We're going to look at exactly why JP Morgan is saying this and provide the context you need to understand what's happening on crypto right now. JP Morgan says that the rotation out of tech stocks might be nearing its end. When we take a look at the US technology sector's recent performance, it's indeed seen quite a bit of a decline over the last couple of months. In fact, we can argue since February of 2024, it's been US technology stocks that have experienced quite a bit of volatility. When we compare that to Bitcoin, we see that Bitcoin has consolidated along with technology stocks. In fact, when we zoom out a little bit further on this chart, we see the very close relationship that Bitcoin has had with the US technology sector. And so this JP Morgan analyst is essentially saying that he expects US tech stocks to recover and for that to have a positive impact on Bitcoin. Now you're probably wondering, how do they know that this panic is nearing its end and that we won't continue to see additional decline on both US tech stocks and Bitcoin? Well, one indication is on this chart right here. We recently saw the crypto fear and greed index dip into extreme fear, the most extreme level of panic that we've seen over the last 2 years. This could be a sign of what's known as capitulation. And when we look at the previous instances where we saw a lot of fear in the crypto market, a lot of these did mark local bottoms on Bitcoin. This index uses 5 measures: social media, surveys, Bitcoin dominance, volatility, and momentum. And based on the aggregate of these metrics, it indicates how greedy or fearful crypto investors are at any given moment. Now you've probably heard the term to buy when others are fearful and sell when others are greedy. This is what's known as being a contrarian investor. Because if everybody is fearful in the market, they've probably acted on that fear and sold. So all of the bad news is already reflected in the price. Things only need to get a little bit better for people to start buying and for the price to start going up. So JP Morgan may be looking at the crypto market today, observing a lot of fear, including that a bottom is likely getting very close. We also see this by simply looking at the Google Trends searches for Bitcoin bull. Searches for this term surged to the highest level of the last 5 years in March of 2024. This was right at Bitcoin's all-time highs at $70,000. Now with Bitcoin down 30% since March, all of a sudden you see a lot less people showing interest in any Bitcoin bullish behavior. Just because a lot of people are fearful doesn't guarantee that Bitcoin will be bottoming, and this is where JP Morgan could be wrong that Bitcoin is a buying opportunity. Because when we zoom out a little bit further, we see that there are periods where the crypto market can stay fearful for extended periods of time. That was the case, for example, in 2022. The first extremely fearful reading came in November of 2021, but Bitcoin continued to move lower until December of 2022. So almost a full year of a very fearful market. Is there anything that could cause Bitcoin to do something similar this time around? We've previously shown the very tight correlation that exists between Bitcoin and US economic activity. This line right here, you could say, represents US economic activity. And when you add Bitcoin on top of this chart, you see that the two lines tend to go up together and down together. When economic activity picks up, investors are willing to take on risk in financial markets, and so they go into assets like Bitcoin. When economic activity declines, investors take less risk in the market, and Bitcoin tends to struggle. And this is exactly what's happening more recently. The last 2 readings on the ISM PMI indicated a significant slowdown in economic activity. Bitcoin was of course dragged lower during that time period. So the bearish scenario for Bitcoin would be to see continued weakness in US economic activity, driving down the asset. We've seen the ISM PMI dip much lower than current levels quite a few times. All of these dips coincide with US recessions. When we look at the technicals on Bitcoin, we see its moving averages have started to curl downwards recently. This is not something that Bitcoin typically does during strong bull markets. In 2017, for example, Bitcoin witnessed multiple 30% corrections that each time were resolved to the upside. But the upward sloping moving averages were showing that Bitcoin's uptrend was intact despite these drawdowns. That's not what we see today with these moving averages curling downwards and price even breaking below them. Of course, there are exceptions like 2023 where Bitcoin broke below its key moving averages that were starting to slope downwards before eventually breaking back above them and rallying quickly. Only time will tell if that is what ends up happening today.